Hey everyone, Dr. Stock here, ending another week in the stock market. And well, I said that we would end green. That was my call for it based on consumer sentiment that I thought would come in very well for us. And honestly, it came in mixed, and well, so did our indices. We have the Dow Jones green, the S&P green, the NASDAQ red, the NASDAQ not quite coming through for us. And I think it's because it's most sensitive to the information that we got in the consumer sentiment out of those three indices. So we're going to talk about consumer sentiment in this video, and we'll also talk about the upcoming CPI. And we actually got revision data. So that video that I put out this morning, actually the information has changed since then, since we got that release on the seasonal adjustment changes that we got for 2018 through 2022. And we'll see how that impacts CPI moving forward. And it changes what I said at least a little bit. When I did see the revisions to CPI, I put that out in my Discord, which you can access through my Patreon. And if you would like to be part of my community, you can find that link down in the description. I would absolutely love to have you over there. That community is growing quickly, and for a limited time, there are still our $10 slots available. So come on over, click that, sign up, join the community, and add to the conversation that's over there and see all the services and products that I have to offer. I look forward to it. With that said, I'm Dr. Stock, Doctor of Education. Let's get right into it. So what I have on the screen in front of you is the survey for consumer sentiment, and just looking at February from last year to February of this year, and February compared to January of this year, we are up from both of those. And I said if that comes in above consensus, which was at 65, and we came in at 66.4, we would be in really good shape and we should see green in the markets. And I think that may have given us a little bit of upward movement, at least at first when they came out. And you can see the year-over-year changes, 5.7, 6.5, 4.9. Month-over-month changes, we dropped just a little bit for the index of consumer expectations for the overall outlook of the health of the economy. But I don't know that that was all that significant. Instead, when we scroll down and we read a little bit more about the surveys of consumers that we see, there we go. Overall high prices continue to weigh on consumers despite the recent moderation in inflation, and sentiment remains more than 22% below its historical average since 1978. Combined with these current concerns, this part right here I thought was huge. Combined with concerns over rising unemployment on the horizon, consumers are poised to exercise greater caution with their spending in the months ahead. So if that's in the consumer sentiment, if that is what's being interpreted right now, that people are saying, you know, we got to be careful with how we spend our money, that is something that can really slow down the economy, and that could put us closer to that edge of recession if we're not already in one, and it could also really spell things out for us if inflation does continue to rise, or it doesn't moderate like we think it will, or if it's a little bit stickier and we hear that we're going to get higher inflation for longer. Those are all things that can be bad for the economy moving forward, that can reduce that GDP that we get. So that can bring us down to a slower GDP growth. Having a little bit of trouble today at the end of the day. Here, enunciation exercise. Are you ready? Toy boat, toy boat, toy boat. There we go. And then there's this one to keep from getting tongue-tied. Red leather, yellow leather, red leather, yellow leather. There we go. Back on track. So that part that we hear about high prices weighing on consumers, and that also consumers are poised to exercise greater caution with their spending, and also unemployment on the horizon. Those are all things that can really talk about the growth of the economy that we're going to experience moving forward from here. We really want to watch as March comes out, following the other reports that we get throughout the month of February. So there's a little bit more to be picked apart here, and this is really why I think, even though we got a positive consumer sentiment report by the headline numbers, when we look down here, year ahead inflation moved back up to over 4%, to 4.2% for the year ahead, up from 3.9% that we had in January. So instead of it ticking down, now it finally ticked back up. And so that is something that weighed on the markets instead. And we will take a look at the markets. We'll do a little bit of technical analysis. And I also, since I talked about Tesla early in the week, we'll take a look at Tesla in that as well, so we can see if that really did move back down from where we're at. And if you're somebody who follows Tesla, well, then you probably already know the answer. So let's move on from there. I'm going to take a look at the updated seasonal factors. So I'm not going to spend a lot of time on this screen. All I want to show you is that it does mention that there has been an adjustment for the seasonal factors for January 18th through through December. My goodness, one more time, January 2018 through December 2022. And that's important. That's really important because that means that when we look at the recent months, when we had the drop in the CPI from October down to November, down to December, which actually went negative because of these seasonal adjustments, that has now changed. We have 0.5% in October, and then we have, instead of 0.4, I should mention that. It used to be 0.4 in October. Now, given the new seasonal adjustments, it's up to 0.5. November went from 0.1 up to 0.2. December went from negative 0.1 up to positive 0.1. And then that also ties in with the new consensus estimate that we have, which, I just said yesterday for all items that it was 0.5%. Seasonal adjustment comes in and that changed that just a little bit because we're coming off of a higher platform, if you will, from December. Instead of being negative 0.1, which you could think of as that being easier to step over for possibly having a higher month-over-month value for the next month that comes along. Now we've moved up 0.2%, and that makes it just a tiny bit harder to step so high. So instead of 0.5% month over month for all items from the CPI coming out on Tuesday, the consensus now sits at 0.4. So I just put here quickly on the spreadsheet, and I want to show you right at the top. I'll zoom in so you can see this on the top of the screen. Revised seasonally adjusted indexes 2022. So this just came out today, and I have these calculations for you on screen. The month over month percentage for October, there's the 0.5, there's November at the 0.2, and that comes from these values that you see coming out along the side here. And before those are so this is row 6 is 2022. So December 0.1, and now here sits consensus at 0.4. And that's significant for a few reasons, not the least of which is what I was talking about yesterday, that before we had a 2 standard deviation event going from negative 0.1 jumping up quickly 0.6% up to 0.5. And I know that sounds kind of tangled. If you want to see the spreadsheet that I have for that, it is available over at the Patreon. Come on over, sign up, join me, and like I said, join the conversation, see the research that I have to say. You can pick my brain about it. I'd be more than happy to answer all those questions. This is more like a 1 standard deviation event. This happens to go up from 0.1 to 0.4, that change of 0.3 in that, or that quick change in rate, if you want to call that happens about 5% of the time historically, from 1947 all the way up through December 2022, because we don't have January's number yet in 2023. That's what we're getting on Tuesday, Valentine's Day. So watch out for that. That happens, like I said, about 5% of the time. That's 2.5 times more likely than what we had before. So this 0.4 is much more reasonable, much more expected than seeing that 0.5, at least according to the typical movements that we've had over time. And so even though that doesn't take into account what happens in the background in the economy with the price inflations in order to cause that to happen, we know that's much more rare for it to change that much from one month to another, 2% of the time to change that much from one month to the next. Now it's 5%, 2.5 times more likely. It's within 1 standard deviation of the mean. And so there you go. Bob's your uncle. Did I get that right? I have somebody over in the Discord, one of my patrons who comes from London. So if you're watching this, here's a shout out to you. I'm not going to use your name because I didn't ask permission to use your name, but I said that I would try and use those British colloquial phrases. And should I try a fake British accent? Bob's your uncle. Oh, listen, if I butchered that and you're upset about it, just let me know down in the comments. And, I've got my own accent that's perfected for myself, and then anybody else's, I promise, is probably not a good impression. So let's move on over to everyone's favorite part, the charts. All right, so the cues, the one that let me down today. Now, if you're new to trading, you see the green, you think up, you see the red, you think down, and that's basically it. However, you need to pay attention to where we open. So even though we have a green candle today, the NASDAQ still closing down about 0.6%, and that was from the previous close that we had. So even though it's a green candle, that means that within that day's worth of trading, the open is lower than the close, or we closed higher than we opened, however you want to say it. However, that close was not above the previous close that we had on the day before. So there you go, we're stuck. So let me zoom back out. That candle that you see right there, that long-legged doji candle that we have, that can be a moment of indecision. It's a little bit more telling, a little bit more significant when it's at the bottom of a major sell-off or anything. However, Like I said, indecisive market. I think CPI is what we're holding back on. I don't think Monday's going to give us that news. We could see fear in the market on Monday, and it could be a very red day, and then green the next day following that when we find out that it's not that bad. We could see green on Monday in the market, expecting CPI to come in very well, and then come in worse on Tuesday. It can go any direction, and there's so many other influences on the market. Really, you want to think about it in a pressure scenario. So if the market is anticipating really bad news from the CPI, that can be added downward pressure. If they're not expecting terrible news, or if they're expecting good news, that's not as much pressure down, or it can even be some levity to the markets. It can help push them up more. That's for Monday. And then on Tuesday, when we get the actual CPI report at 8:30 a.m., when those numbers come out, then we get to really see the market react to it. And so, we'll watch for that. My call is still that we get a red day, that we retest some of these areas of support. This 200 day is actually one that we really want to watch for the S&P. I'm sorry, not the S&P. These are the Qs. But we will now jump over to the S&P. We'll actually go to the SPY, which tracks the S&P. There we go. And we closed right there. And you can see we're right back to these two previous highs that we had, right back to resistance. And, there we sit. And we are still about 2%, just like in my last video, about 2% above that 4,000 level in the SPY. So 4,000, I think, is going to be a critical area of support for us. And if we get a very strong negative report in CPI, that could be something that puts a lot of downward pressure on, that causes us to break through that support. If we get something that's kind of middle of the road, not so bad, we could sit on that support and we could hold there. And if we get something that surprises to the upside, that inflation comes in lower than expected, then we could come back and test some of these higher areas of resistance. And, I guess we're going to have to watch and see as that comes out. I do expect that 0.4% for all items, I think, is reasonable. It's also for core CPI, 0.4% is still the consensus there as well. So we want to watch as that comes out and see how close we come into those consensus estimates. We've been surprised before, and we shouldn't be surprised if we get surprised again. So I did say that we would take a look at Tesla. Here's Tesla on the screen, and I'll zoom back in and let me draw in some of these lines that we have in here. I often delete off the lines because I don't like to have super busy charts. For me, it's too distracting. It's too hard to read. And apparently I also made my line style very thick. There we go. So putting that horizontal in, we actually closed right back at what used to be resistance at about the 200 level. And then today we closed under that 200 level. So about 196. So that's something to watch for us. And if I put another line on here, maybe off that top and bottom, and then there we go. I need to change my default there so it quits putting in these very heavy horizontal lines because it covers up too much of the chart. Perfect. There we go. So we have a decent amount of room for this. Actually, I want to move that just a little bit. There we go. So we could still fall down from Tesla from where we're at. And remember, Tesla bull sitting here. I think that Tesla is one of the most incredible growth companies, with probably one of the growth companies that we can rely on to keep performing for us over the next several years, if not throughout the next decade, to really turn out serious upside results for us, especially if they get that full self-driving up and running, especially with the AI wave coming in and the EV movement being pushed over time. If that continues to grow the way that we expect it will, Tesla is still by far dominant in that market, and I think that they'll continue to be so. So with that said, yeah, they dropped. They came right back down to support. And if we see red in the markets, a lot of red in the markets, that inflation comes in even hotter than expected, that can be something that allows us to visit these areas of support. I think that very, very hard support is this 50-day simple moving average down at about $150, that it could come back and retest that, even if it smashes through the other ones that are currently there. 178 is a decent drop from where it's at. And if you're somebody who's bullish on Tesla, you can find opportunities, better buying opportunities, that when it makes that climb, where if I zoom out a little bit, you see just a little bit of volume tapering off. Now, we actually did get some sell side pressure today, bringing it back down, making it a little bit cheaper and de-risking it for people who are also bullish on Tesla. So let me wrap this up for you. Consumer sentiment came in positive, good. Inflation over the next year, a little bit higher, bad. Consumers protecting their cash, slowing down, being more conscientious of their spending, that's economic slowdown. People losing their jobs, bad. So that's why We see a little bit of that mix in the markets today between the Dow Jones, S&P, NASDAQ. They were up, they were down. Two of them finished up, one finished down. We didn't necessarily get a clear indication of that move forward. And as I have been saying on my channel, I think CPI is going to be that really big day. And then once we see that, then we can talk about the next big catalyst that comes up. Fed minutes, one of those things. PCE, which comes with personal income and outlays. That one, which I'll provide that research as well that I have over at the Patreon. Come on over, be part of the community. Get access to that information and see my Patreon exclusive videos where I detail the highlights of that information as well, much more thoroughly than what I do here on YouTube. So, like I said, that link for the Patreon is down in the description. Tesla, I think in the short term, continues to drop along with the markets. March 1st is that day to watch out for Tesla for that investor day. If we get a run up in the Tesla price, prior to that, especially in the few days leading up to that, I expect a sell the news event to happen typically within that week leading up to March 1st, possibly even on March 1st itself. So that's what I have for you guys today. Thank you for watching this video. I hope that this week was good to you in the markets. And what was your best performing stock? Tell me down in the comments. If you've seen the live streams with Stock Moe and I will be live streaming again tomorrow. If you're not subscribed to Stock Moe, go over to his channel. I'll put a link down in the description to our last live stream so that way you can get over to his channel, watch his videos. You can watch that past live stream. Like I said, tomorrow, 8 p.m., we'll be putting out another live stream, and I'll have that link available for you. I actually get to host it on my channel. I'm pretty excited about it, and I hope to see all of you out there. He has the Tesla cat emoji, and for me, because I'm a big learning nerd, I got the nerd emoji. So you can put that nerd emoji down in the comments as just a shout out to me to show your support. That's an absolutely free way to do it. Another way to do it is to hit the like button. Also hit the subscribe button and notification bell. And if you're a very passionate supporter, you love the videos that I have, and you want to see more of what I have to offer and be part of my community, hit up that link for the Patreon down in the description. I would absolutely love to have you over there. I'm very grateful for the patrons, for the community that I have building so far. They seem like very wonderful people, and I look forward to increasing the number of products and services that I offer them over time as this channel continues to build. I'll let you guys go. Thank you very much for watching, especially if you watched all the way to the end. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.